Hi, everyone. Nice to see you again. This is Sam, and I have Eric here with me. We are here today doing our Ask Me Anything monthly chat. So, Eric, thanks again for being here with me today.
Oh, no, it's great. I am officially NATP today. I got my swag, which is cool. But no, thanks.
Excellent. Yeah. How's it going over by you?
Good, beautiful, sunny, 70 degrees. This isn't going to last, but we've had a small window of great weather.
Good. And Connecticut.
In Connecticut,
so everyone knows where we are. And I'm in lovely Wisconsin, where it is overcast and today, but that's all right. So, like I said, we are here doing our Ask Me Anything. And Eric, we have some questions from some fans this week. So we are just going to dive right in, if that's all right with you. First question, does the affidavit associated with a payroll tax protest need to be prepared by an attorney? This one's from Michael.
Yeah, no. All right. So what Michael's talking about is when the IRS pursues somebody as responsible for the unpaid payroll taxes. I've discussed the NATP. If you look at the on-demand, the training we've done in there, we go through a case study, and what I talk about is if you want to support that the taxpayer really wasn't responsible, like for instance, they're signing checks, but there's really someone directing them. If you have witnesses to that, you can get an affidavit. And IRS appeals puts a lot of weight on that affidavit, because what it signals is we have witnesses that if we go to trial are going to basically take the stand in support of our client. So they're very powerful if you can get them, and IRS appeals puts a lot of weight on them. The question was, should they be created by an attorney or drafted by an attorney? The answer is yes, because it's an affidavit. It's a legal document. I don't recommend CPAs and EAs begin drafting legal documents, the unauthorized practice of law. So no, you would want to get an attorney involved and have them draft the document and have it notarized.
Okay, that's great information. So it definitely requires a little bit of special work. Kind of a situation.
Yeah, if you can take the case to the point where you've got everyone lined up, it makes the attorney's life a lot easier. If all they need to do is draft an affidavit and hand it off, and you can take it to a notary and sign, great.
Okay, wonderful. Next question for you. When a client requests audit reconsideration, can we request a hold on collections during the audit process?
Yes, no, absolutely. So the taxpayer now owes a debt they don't believe they owe. You're going to request audit reconsideration. So you send in, I think it's form 12661. It's the disputed issue. And there's a publication on how to do this. But you submit the audit reconsideration. Yeah, what you would do is you would call automated collections. Now, actually, you know what, Sam? There are two different ways this can go. If you're dealing with a revenue officer in the field, what you should do is submit it through the revenue officer. They should then close their case for collection purposes while the audit reconsideration is going on. Now, if the audit reconsideration basically argues to no liability, then they should close their case. If there is still going to be a liability, don't be surprised if the revenue officer says, well, okay, why don't we set up a payment plan, because you're going to owe money anyway. So they would still want to continue forward. If it's being sent in and you're dealing with automated collections, one of the campuses, now you don't have a human being that's really working on the case with you. Yes, you should call up. It's 800-829-3903 is automated collections, and request a hold on collection. They'll usually give you 45 days, I think is the outer limit of that, which means like every 45 days, you're going to be calling back and renewing that hold, which is a little bit annoying because you don't know how much fun it is to call the IRS these days. But yeah, no, I agree that you should be calling and getting a hold on and keep that extended. Otherwise, the client theoretically could get levied.
Got it. So through the entire audit process, you would want to continue that hold.
Audit reconsideration.
Yeah. Reconsideration.
So the client now has this balance either from an audit or they didn't file and the government did a substitute for return. the way that you correct that, one of the ways is through an audit reconsideration. The two main ways are audit reconsideration and a doubt as to liability offer. What I like about a doubt as to liability offer is you submit the offer and it stops collection because it's an offer. The negative thing is, because it's an offer, you're making an offer to resolve the balance. You can't get a refund. So, Sam, if the client, let's say, got levied and now they come to you and now you request reconsideration, if you do that within 2 years of the levy, you can get that money back potentially through audit reconsideration, not doubt as to liability. So with the doubt as to liability offer, it stops collection, which makes the whole process a lot easier, but you can't get a refund. So if you need to try to pursue and get money back, you have to go audit reconsideration, which means you do have to keep calling and getting a hold on collections.
Got it. Okay. Thanks for the clarification. That's good info. This third question we have: how do national resolution companies always get offers accepted and penalties abated? This sounds like someone with a little bit of experience.
This is someone who's listening to the commercials. They don't. Okay. In fact, and listen, by the way, some of them are legitimate. They actually do help taxpayers, but what you will find for the most part, the answer is they don't. All right. I mean, I got to be honest. I live in this world 24/7, and I can't guarantee offers get accepted. I mean, we have a very high percentage, but it's also because we weed out people that aren't offer candidates. What the national companies want to do is they want to get money and get out. So what they usually will try to do is take those cases, put them in streamlined installment agreements where you don't have to submit any financials, and request first-time penalty abatement, and that's it. And so a lot of those wins that you hear them talking about are where somebody came in and you'll hear them, oh yeah, they made a phone call on the penalty. That was a first-time penalty abatement. You can do that too. The more complicated, where you're going for reasonable cause, this person's had horrible things happen to them and now you're documenting it. They don't like to do those cases because one of the things that really imploded Tax Masters and J.K. Harris, who all started off as legitimate enterprises, they couldn't manage their inventory. They got so busy so quickly. I think when J.K. Harris folded, they had 7,000 cases that had never been touched. They literally could not keep up with the workflow. So what the newer companies have discovered is, what can we do that's easy? We can get quick money and get out, because to track and follow up and like an offer can take a year and a half. They don't want to manage that kind of an inventory, so they don't do many of those. So don't believe the hype.
Okay.
They're legitimate, but they're going for the low hanging fruit.
Got it. Definitely a marketing kind of wording there, you could say.
It's amazing what you can say.
It's true. Next question for you, and this one's actually pretty timely with the October 15th deadline coming up. But if my client does not have their financial information ready for October 15th, should I file a zero return to avoid the failure to file penalty and file an amended return later? No. Okay.
No. So
explain.
Well, yeah. And what the thought is my client, who for some strange reason has been unable to get their stuff together for 10 months this year, and now we're running up against the deadline and they're not ready, and they don't want to pay the 25% failure to file penalty. It's 5% a month, capped at 25%. So the theory I've heard is we'll file a zero return and then we'll amend. Well, let me tell you, there is a number of instances where later on people will, I'll contact a CPA when the person's in trouble and say, why did you file a zero return? Because now criminal investigation is involved. And they say, oh, well, we can always go back and amend. I'm like, great. When did you? Oh, well, we didn't. So one is, what I don't like about this is you're now filing a return is wrong. It's not zero. And you're hoping that client comes back with their stuff. What if they don't? You've just signed onto a return, excuse me, that is inaccurate. I mean, this may sound a little extreme. You filed a false return. What I think would be better is if you actually estimated the numbers with what the client had and you disclosed it. The taxpayer has had, lost their records, was unable to get them in time. We've used estimates because at least then you've disclosed to the government, hey, I am signing this based on estimates, which, by the way, you're allowed to do. It's the case called Cohan versus Commissioner. We should do a whole program just on that. It's a fascinating case. Well, you've actually heard of George Cohan. It's 1910, 1920. Sam, give my regards to Broadway.
Yes.
Yankee Doodle Boy. Famous
Yes.
songs. He's a very famous, and it doesn't matter.
Yeah.
But he ended up he used estimates, and the IRS said, well, you get nothing because you don't have receipts. And the court overturned it, said, no, you can't do that. If it's obvious they had the expense and they don't have receipts, they are allowed to use estimates. The burden now shifts to the IRS to show that they're wrong. So I think as a preparer, if you use estimates and disclose it, at least professionally, you're covered. Now, hopefully the client comes back and you can file a corrected return. But if you never see them again, you can sleep at night. You haven't filed anything. The zero return frightens me. I'll admit, I had this once. CI did ultimately go away. But it's not like they're making these criminal cases left and right. It just, that experience frightened me to suggest to an EA or CPA or any practitioner, because technically you file the return is inaccurate. Now, the truth is what you really should do is refuse to file anything. Listen, the client, I'll be honest, the client's had 10 months. It's their problem. And I have an outside CPA firm and I have a controller in the office next to me. I hate dealing with this. And I'm a tax lawyer. But it's my problem. So I got to take a weekend and get all my crap together and get them over to the outside accounting firm to get my 1040 done. This is a client that was too busy in July or whatever they were doing. It's their problem. So you know what? They're going to get tagged for the penalty. That's really what you probably should do. Worst case, if they can get you enough information, you can file with the estimates, but you got to disclose that they're estimates and tell the client they better get back here or they're going to have a potential problem.
Yeah, no, that's really good information. You hear that. Yeah. Yes. And you hear that. I've heard that quite a bit, recommended to file the zero return. And so that's a new viewpoint. That's interesting. I like it. Last question for you, Eric. Can you really add $100,000 to your income, like you said at TaxCon? This one has a little bit of history to it. So you presented at our TaxCon event, our virtual learning event, and so this person is following up on that.
So the question was, can you really add $100,000 to your bottom line doing representation? Yes, without a doubt. I generate over $1 million a year of collections for my firm. So and I'm going to explain why. The client that comes to me, and I'm just going to do like those national companies. I'm just going to get a power of attorney. I'm going to make a phone call for request first time abatement and set them up in this automatic streamline installment agreement. We charge $1,500 for it, and it takes not even an hour. Offers and compromise, we charge $5,000, and then you often have to go to appeals. I get about 95% of my offers accepted, but the vast majority we do at appeals. All in according to the tax rep members we surveyed, the average offer fees, whereas this is in 2018, was $8,800. The average payroll tax case, because they have to help the company, then you have to resolve the trust fund assessment against the owners. The average fees from start to finish, including the state, $15,000. How many of those clients do you need to find to add $100,000? 8, 10? There are 50 million in America that are in trouble between non-filers and people in collection. So yes, I stand absolutely behind that statement that if you focus on this, yes, you can add way more than 100,000, but I think it's not too much of a stretch that you could market yourself and add that money to your bottom line and do way less work for it.
So this is really a great revenue source for people looking to expand.
If you're doing taxes already, this is an easy thing to add. You don't have to change what you're doing. I think what will happen is as you do more and more, you'll find, and what many of my tax rep members have found, they're going to sell their 1040 practice. It's just not worth doing. they can make more money doing the representation and do way less of it. You know, that tax season nightmare just kind of goes away. We're kind of steadily busy year round without these ridiculous spikes. Looks like we have some more questions.
We do. Yeah. Yep. There's one that came in. Is there anything a client can do? This one's from Teresa, it looks like. Is there anything a client can do when preparer filed a different return the client signed with regard to tax owed? Preparer has been indicted and not sure where that leaves client and what he owes now.
Okay.
Seems like there's a lot to unpack there.
I see Sandy's question too, which I'll get to
Yes.
after. Teresa, is there anything a client can do when the preparer filed a different return than the client signed? I had this actually, and we were actually representing the criminal, the preparer. What the preparer did in that case, Teresa, was people would come in to see her, and she would meet with them and she'd do the return. And let's say they have a $1,000 refund coming back to them. There's a form, I think it's 8888, where you split the refund. So the client signs, this is how she gets paid, right? She'll get $250, the client gets $750, they sign, off they go with their return, the copy. She then goes back into the software, creates all kinds of phony deductions, and keeps the split. The client still just gets their $750, she's taking $4,000. So what happened is the IRS picked up on this. They went and interviewed 25 clients and got copies of the returns that they had and compared it to what was filed, and it was very obvious. So, Teresa, what happens now is, so you had a bad preparer file a return that was different. What I think your client should do is they'd have to take the corrected information to a new preparer, file an amended return to fix it. Okay. The other thing, though, is, Teresa, you may want to have the client, once they have it prepared, reach out to the criminal agents, because theoretically, here's what's going to happen. Or what I'm betting, they'll file this amended return. It's going to show up, well, it'll fix what was in the system, but the bad actor stole the refund. And so now what'll happen is there's going to be a bill back to that taxpayer who never received that money. So that's what you're going to have to deal with, is to basically try to get that removed, because effectively it was stolen by somebody else. So Teresa, honestly, what I would do first, have the client bring their actual records, or if they actually have a copy of the good return, prepare an amended based on that. And what I would do is actually contact me. I can contact the Deputy Chief of Criminal Investigation and find out what they want to do about it. One is, they may already correct it and not want the return filed, because again, it'll trigger a bill and it's going to be kind of a nightmare, or they may have a system in place for doing that. But what concerns me is you normally file the amended return to fix it, except for the fact that now it's going to trigger a bill for the refund that the bad actor got. So you may want to reach out to me on that, because as we're sitting here talking through it, I know mechanically what has to happen, but I'm not sure how we should deal with CI.
And Eric, do you want to share your email?
Sure.
Or is that okay?
Yeah, no. It's I think it's all, you can Google me. I'm easy to find. It's egreen, EGREEN, at gs-lawfirm.com. So egreen at G as in green, S as in Sam, -lawfirm.com.
Wonderful.
And Sandy had asked, can you, or are you willing to represent a Wisconsin resident? So Sandy, yes, I am, but no, you should do it. All right. No, I know. I mean, whatever it is, Sandy should charge the $5,000, take the retainer, and do the work. This is what Tax Rep is, by the way. The NATP's help desk. We're your help desk for representation. So my honest advice would be, you get the case, you take the retainer. If you need help, we have that special deal with NATP. Sign up for Tax Rep, and we'll help you through the case.
We do indeed. Looks like that's all that we have coming in for today, Eric. Anything else that you want to add, or any Any last
No,
words?
I know everyone right now has their heads down, right, with September 15th and then October 15th. But I'm telling you right now, things are getting hot and heavy in representation. So after October 15th, you come up for a breath of fresh air, you take a week off or so. Now is a great time to be looking to launch your or build your representation practice. So timing couldn't be better.
Wonderful. Well, thanks so much again, Eric, for being here. I know everyone really appreciates it, and it's nice that you were able to answer some questions on the fly. So thanks again, everyone, for tuning in, and we will see you next month. All right. Thanks again. Bye-bye.
Bye-bye.